Hello fellow investor, welcome to the channel. In this video we look at the earnings expectations for UPS. UPS is scheduled to report third quarter earnings on Tuesday, October 28th before the market open. I'll cover several topics to see how UPS is trading going into the earnings and help set expectations moving forward. We will review the current price chart and trend charts along with some key valuation metrics. I'll also share my UPS portfolio holdings and performance. Let's get started.
UPS is scheduled to report third quarter earnings on Tuesday, October 28th before the market open. In the previous quarter, UPS reported revenue of $21.22 billion, beating revenue estimates by $367.47 million. UPS reported earnings of $1.55 per share, missing estimates by 2 cents. For this quarter, the revenue estimate is $20.84 billion with earnings of $1.31 per share. Over the last 90 days, no analysts raised estimates and 23 analysts lowered estimates. UPS beats analysts' one-year forward estimates 73% of the time. UPS is showing positive relative strength going into earnings. The options market is pricing an implied move of plus or minus 8%.
Let's start off with UPS using a 3-year daily view. I have drawn some downtrend lines, one that started on April the 24th of 2023, and I'm connecting the top that we saw in January of 2025. This particular trend line has been tested as resistance in July, where it was rejected. It also served as resistance on October the 23rd, where it was rejected, and again on January the 30th, when it was rejected, and it is currently trading below that trend line. I have a shorter term trend line which starts in January and connects the July 25th high, and you can see that we're trading below that particular trend line at the moment. Then I have even a shorter trend line to about the 25th of July, connecting the top that we saw in early October, and it has broken above that particular trend line. So that kind of sets the stage of the downtrend that UPS has been in. We'll switch to just look at a 1-year chart. We can see that UPS has bottomed out here, and for the last week has been on an uptrend. We did have a small pullback yesterday. It is trading above a 21-day exponential moving average. It is trading above its 5-day moving average. It is trading below a downward sloping 200-day moving average. And the 50-day, the 21-day just crossed above the 50-day, but the 50-day had been declining, and then it bottomed out and is actually increasing at this point. We can also see the RSI is currently sitting at 58, and the PPO is in positive territory. They did report last on July 29th, and we saw about a 10% pullback following their earnings. For the RSI, we did see that they are holding about the RSI of about 40 on this most recent pullback. That's usually pretty good news. They didn't sink into oversold territory, but they held that 40 line. And then one other thing that we see is the RSI did come back positive and cross above the previous high. So to me, these are all good good pieces of news, although they're still struggling. The price action does seem to be fairly positive as we move into earnings. The accumulation distribution has pretty much been in distribution since the last earnings. The money flow is currently positive. We can see over the past year it spent most of its time in distribution mode. UPS has underperformed the S&P 500 by 38%. It's underperformed the industrial group by 37%. It's underperformed delivery services industry group by 12%. And the delivery services industry group has underperformed the S&P 500 by nearly 30%. When we look at the 5-year weekly chart, which basically compares multiples of a long-term average, medium-term averages, and shorter-term averages, we can see that UPS has had the shorter-term average underperforming the longer-term average since about the 28th of July, 2023. They are also underperforming most of the time the medium-term averages. We do see a small improvement here recently. They did get positive for a couple of months at a time, but have spent most of the time underperforming those averages. And then finally, we can see in the shorter term they have moved back positive as far as the short-term averages. We can look at some key valuation growth and profitability metrics from Seeking Alpha. We can see that UPS is trading at a forward PE of 13.53 times compared to the sector median of 21.12 times. The expected EPS growth rate is minus 7% for UPS compared to the sector at 8.05%. And the expected revenue growth for UPS is negative 1.23% compared to the sector average of 4.98%. So we can see that UPS is trading below the market multiple of the sector, but deservedly so given the expected EPS growth rate and the expected revenue growth rate. Then turning our attention to profitability, we can see that UPS is slightly more profitable than the sector. UPS has a 6.34% net margin compared to the sector median at 6.07%. When we look at UPS in FASTgraphs, we can see that they're trading at a blended PE of 13.01 times. They do have an EPS yield of 7.69%. They have a dividend yield of 7.53%. We can also see that they have grown their earnings over this period by 3.92% on average per year. FASTgraphs has their fair value calculated at 15 times, and the market normal multiple PE ratio is 17.65 times. The normal PE is shown by the blue line, while the fair value ratio is shown by the gold-colored line. If we step out to the max data range that we have available, we can see that UPS is traded below their fair value during the global recession in 2008. We can also see that they crossed below that fair value in 2018 traded slightly above it and then dropped back down in 2019. They traded most of the time above that fair value up until recently when they broke back down through the fair value in February and are currently trading below that value now. If we look at their earnings over this time period, we see that they do have 3 years where they had contracting earnings per share, but they are expected to grow those earnings in 2026 by 9% and 11% for 2027, according to the analysts. So if we look at the current price and if they could return back to their fair value by the end of 2026, we could see a total rate of return of about 30% over the next year and a quarter. We'll turn to my trades and return analysis, and I have to admit UPS is not one of the better trades that I've had in my portfolio. I first entered into UPS in October of 2022. I have a total of 19 trades. All of them are still open. I should have been limiting my losses as I went and moved back in when I felt they had returned to some strength, but I missed that on this particular holding. I don't have any trades that are closed. 3 of the 19 trades are winning trades, and 16 of them are losing trades for a total gain of 1,600 and losses of about 6,000. So this only gives me a win rate of 16% with a gain-loss ratio of 1.4 to 1. So like I said, this is not one of the trades that I'm terribly proud of, but luckily these are few and far between in my portfolio, and something definitely to learn from. So I have about 140 shares at a cost of about $134. I'm have an unrealized return of about 6,100. I do have dividends that I've received of about $1,142. So my current return is minus 4,500 or 26% total return. Given the bottoming out in the charts that I showed, I have started slowly adding shares to UPS over the past month or so. And as long as they continue to show strength, I'll be adding more shares as we go. If you find these earnings previews helpful, I would appreciate you subscribing to the channel so you are alerted to future videos as they get posted. I would also be grateful if you like the video to help support this channel. I wish you the best in your investment journey, and remember to trade well.